Time is money. Seriously. According to Vicki Robin and Joe Dominguez, authors of the best-selling personal finance book Your Money or Your Life, that's one of the very few universally true statements we can make about it. That's because in order to get money, we need to trade away some of our incredibly precious and limited time and energy. In fact, one of the biggest draws to having a high savings rate and reaching financial independence is it allows you to get back at least some of that time that would otherwise have been traded for further accumulation of dollars down the road. Then you can use that time for things that you will enjoy better and get more out of life. Assuming, of course, that you don't already enjoy your work and that's what you want to be spending your time doing anyway. With that in mind, today we're going to be talking about one of the biggest ideas from the book, which is your real hourly wage. Your real hourly wage is the amount of money you're actually getting paid for the time you spend on your job after adjusting for things like commuting time, unpaid breaks, mandatory company outings, business trips, and other things we do related to our work. Some people have also gone as far as figuring out how much they earn per hour after things like their fixed expenses are also taken into account. This gives them a better idea of how much money each hour of their time can be put towards discretionary items, as well as allowing them to figure out how much time those items really cost in order to better understand if they're truly a good use of money for them. This can be a great tool for helping you prioritize your spending, figuring out what's worth your time and money to buy and what isn't, and then of course eliminating any financial waste from your budget. But it can also have a dark side if used incorrectly, which we'll discuss in this video. But with that being said, let's get started. But before we get going, be sure to like this video if you haven't already, as it really does help out the channel a lot, and subscribe with notifications on for more money-related videos like this one every single week. And if you want to further support this channel, you can check out some of the links I've left in the description below, which includes a link to Bluehost. Bluehost is a hosting service that makes it easy for you to build a website for your online business. And if you use my link in the description below this video, you'll get your own domain name for free for a year. So the real hourly wage has a few components. Your income, your spending, and your time. Your income is often more than just your salary. Benefits are generally included because if you didn't have the job, you may find yourself paying a little more for things like health insurance, or investing a little less if your company matches some of what you put into your 401k, and so on and so forth. Your expenses can include a wide variety of things depending on how deep down the rabbit hole you want to go. There's obviously things like taxes and the work-related costs of commuting, such as the gas, parking, and maintenance required for the miles you drive each day, although I suppose depending on what your lifestyle would be, if you were financially independent and didn't have the job, you might also include other things. I mean, hypothetically, if you wouldn't need a car if you didn't work, you could theoretically include all of the vehicle-related costs like insurance, depreciation, financing, and even opportunity costs. But that's a pretty extreme example. Other costs you may want to consider would be any money that went into getting any required education for the job, including any student loan payments that may or may not still be being made years later, or any licenses and certifications that you need to keep active, any union dues, gifts, work-related meals, professional clothing or cosmetics, and even daycare costs could be included as well. Travel and entertainment costs, assuming they're being paid in order to get a break and recover from the stresses of work, might also be included. As I said, some also go so far as to consider fixed monthly expenses such as housing costs to get a better idea of what their real hourly discretionary income is. But that, like many of these items, are totally optional. Again, it depends on how detailed you really want to get. These are just a few examples. Beyond the things we can easily put an exact number to, there are also some intangibles to be considered, such as your enjoyment and passion that you have for your job, or the feeling of fulfillment that it might bring you. Because if those things are really, really low, then even a reasonably high numerical real wage may not be worth the sacrifice long term. Growth potential is another thing to consider, especially when you're looking for a new career or comparing a job to a side hustle or other business opportunity. Sure, one may start out with a higher real wage, but if there's no upward mobility, that is something that you should take into consideration. Lastly, there are the psychological benefits. For example, one of the most costly components of the real wage calculation is transportation. Cars can get pretty darn expensive, especially if you end up deciding to include all the requisite costs in your calculations, as I said a minute ago. Hypothetically, switching from a car to a bike could significantly improve your real hourly wage. But for some, it might also come with additional benefits. It might make you feel more environmentally conscious as a citizen, which could increase happiness, coupled with the relief from stress that this additional exercise could bring you, and you may also have a positive effect on your healthcare costs and improve your relationships at home. Those things are a little tougher to calculate, but they are worth considering. And this is by no means an exhaustive list. In fact, given the very personal nature of it, there isn't going to be much we're going to be able to do, at least in terms of including it when calculating the real hourly wages in this video's example. But just because I'm not here doesn't mean that you shouldn't. You should always take time to consider the intangibles and adjust for them as best you can, because sometimes they can make all the difference in the world when it comes to quality of life, which is ultimately what this system is attempting to help you to do, by identifying what is and is not worth the time and money so that you can find ways to put more of your time and money towards things that give you the most bang for your buck and less towards the things that don't. Now, with those things laid out, let's calculate John's real hourly wage. John makes $25 an hour on paper. He works a full 40 hours a week, 50 weeks a year. He has 2 weeks of paid time off, so his total annual salary is $52,000. In addition to the PTO, John's company matches up to 3% of his salary in his 401k. Assuming John invests at least that much himself, that's a potential benefit of $1,560 a year. John also gets health insurance through his company, which compared to the insurance he would otherwise have to get on the open market is about $150 a month cheaper. That's effectively a benefit of $1,800 a year to John. This means that John's real gross income is about $57,440 per year, assuming no overtime. After taxes, this real income figure will likely drop down to about $46,000. Next, we need to deduct any work-related expenses John has to pay for. We'll assume that he pays around $850 a year in gas commuting to and from the office, $950 in maintenance and repairs, $900 in auto insurance, and $600 per year in depreciation on the value of his vehicle. He owns the car outright, so there are no loan payments, and thankfully he doesn't have to pay anything for parking or tolls either. This means that his work-related commuting costs average around $3,300 per year. His professional clothing needs to be replaced every once in a while, but it's nothing too extravagant. We'll call it $10 a month on average over the course of his career. Office parties cost him around the same, as he does occasionally get parting gifts for some of his coworkers when they retire, or splurge on a night out to celebrate the completion of a big project. In addition to this, John also eats out with a coworker a couple of times a month, which runs him an extra $30. Next, while he doesn't go overboard in terms of escapism expenses, he does take one trip per year along with the occasional sporting event to de-stress. We'll say that together these costs average around $100 a month. Lastly, his fixed monthly expenses are $3,000. Again, this part isn't necessary unless you want to calculate your real hourly discretionary income, but for the purposes of this video, we will throw it in. Now we need to estimate the amount of time that John spends on work. We know that he's paid for 40 hours a week, and we're assuming that he works no overtime in this hypothetical, but what about the other work-related activities? We'll say that John gets a half-hour unpaid break every day. We'll also say that he has an absolutely beautiful 10-minute commute both ways, and that he takes about 40 minutes each morning to get ready for work. He also takes a one-day business trip once a quarter, and attends the monthly company outing, which usually lasts around 2 hours. This means that he's going to be dedicating around 200 hours a month on average towards work-related activities. Therefore, John's real hourly wage, before considering fixed expenses, is $17.73 an hour. That's not bad at all, as a large portion of the difference between it and the $25 an hour we started with can be chalked up to taxes, but it is still enough of a difference to be notable. After adjusting for fixed expenses, John's real hourly discretionary income is $2.73 an hour. Hypothetically, that means that if John wanted to buy, say, a new iPhone 11, which would probably be considered discretionary most of the time, it would cost him around $700. Given his $2.73 an hour real discretionary income, that phone will cost John a whopping 257 hours, or nearly 6.5 weeks of his working life. If we wanted to get even crazier, what if John wanted to buy a new car, say like a Tesla? That could cost him $50,000 or more, especially if he wanted to customize it at all, or have the full self-driving capabilities. Assuming he didn't actually need a new car, we could argue this is a discretionary expense as well. At $2.73 an hour, it would take him 18,315 hours, or 458 weeks, or nearly 9 years to pay for it. Even if we say he did, in fact, need another car, a Tesla is more expensive than most other cars, new or used. So the difference between the cost of a more affordable car and that of a Tesla could still be considered a discretionary portion of that expense. And don't even get me started on how much a home would cost. Now, that brings me to the potential drawbacks of using this method for something other than its intended purpose. If you're like me, looking at those examples kinda gives you a bit of a sickening feeling in the pit of your stomach. Let's address that. First, like I said at the beginning of this video, I don't think this system was really meant to be used to analyze your necessary fixed expenses. There are certainly things we can do to lower our fixed expenses, and perhaps running these numbers once for those things will give some people more motivation to search out and implement some of those cost-saving strategies, and if that's the case, that's great. But we don't want to take it so far that we become overly miserly with our money, or depressed in general. That's not the point of this exercise. Second, so long as it's not stopping you from achieving your other goals, financially and otherwise, there's nothing wrong with the occasional splurge. And there are other ways to look at them in those situations. Let's look at the case of the iPhone. Sure, it cost John 257 hours of his life to buy, but assuming this is not getting in the way of his other goals, he could reframe the situation and ask himself, how many hours of enjoyment will it bring into his life? Next, he could ask himself, is there any other cheaper alternatives that would accomplish the same goals? Perhaps there's an Android phone that would do the trick for a better price. Or maybe he could find a bargain somewhere. Perhaps someone he knows recently bought an iPhone 11, and he could then get a deal on their old iPhone 10. This one could also apply to the Tesla. Perhaps an older or lightly used model would be better. I know that Teslas have, to this point, held their values better than your average car, but there still is some depreciation. Lastly, does its intangible benefits outweigh the cost in time and money? I mentioned that switching from a car to a bike might have some of those intangible benefits beyond just the monetary ones. The same could be said for a Tesla, since over time it is more environmentally friendly than your typical car anyway, and maybe John is in a solid place financially already. He lives too far away from work to bike and doesn't have access to public transportation, so this could be a way of him being more environmentally conscious. That might be worth it to him in that situation. Again, not everything's about the money. And financial independence and all the content surrounding it is less geared towards creating more time for yourself, because no matter what we do, we only have so much of that to begin with, but rather the goal is to use as much of the time we already have as possible, even better. Another potential issue of running these numbers is that it can lead to you marginalizing the value you place on the job, or of yourself. We've all probably heard the saying before, your self-worth is not determined by your net worth, but it doesn't make it any less true. The same thing can be said for the worth of a job. Instead of looking at yourself or the job purely through the lens of the real hourly wage, ask yourself, how else do you, or the job, contribute to the well-being of yourself, others, or society at large? Teachers are a fantastic example of a job with a low real hourly wage in terms of dollars, but an incredibly high worth in other areas. Another thing that can be done to significantly alter your real hourly discretionary income, since that seems to usually be the culprit for most of these feelings, is to find ways to make your fixed costs a lower percentage of your overall income. In other words, find ways to lower your burn rate, or increase your overall income, as we've talked about in countless videos already on this channel. Take advantage of techniques like the debt snowball, avalanche, or even tsunami to wipe out your monthly debt payments and keep more of your income. Try out rent or house hacking to significantly slash your shelter costs. Since this is often the biggest line item on our budgets, you have an opportunity to find massive savings with these strategies. Finally, think about starting a side hustle and continue to improve your financial intelligence so that you can better manage things like your investments, thus increasing your income, and lower your tax burden, and further increase your savings rates. So, in summation, the real hourly wage exercise is a tool to help you better prioritize your spending and hopefully eliminate any waste that might exist in your budget. It gives you another way to view your spending that aims to help you decide what is worth your money and time and what isn't. It's not the be-all, end-all of life and money decisions, but if used properly, it can help you increase your savings rate and draw one step closer to financial independence. But that'll do it for me today. Once again, if you enjoyed this video, be sure to smash that like button if you haven't already, subscribe, and hit that bell next to my name so you'll be notified of all my future uploads. I generally upload every single Monday, and if you have a friend that would be interested in this kind of content, be sure to share it with them. Let's really get this information out there and start our own financial revolution.